Good morning. This is the Office of Tax Appeals hearing for the appeal of Gallagher's Irish Pub, Inc. I'm going to explain a few logistical things about how this hearing will work, and then after that, we will officially go on the record, and then once we are on the record, I will ask all of the participants to identify themselves. First, I just want to go over to make sure everyone understands how to use their microphone. You pull the microphone up close to you. Sometimes you have to really lean into it to make sure that it hears you. And you hit the button that says push, and there should be a green light on when you are speaking. You don't have to hold the button down. You can just hold it for a second, let it go, and then when you are done speaking, you hit the button again, like that, and it goes to a red light, and then it is not picking up what you are saying. When the green light is on, it can be very sensitive, so you definitely want to turn off the microphone when you're not speaking, so otherwise it will broadcast every turn of a page. All right, and also please everyone silence your cell phones if you have not already done so, because we don't want to be interrupted by phones ringing. Please remember that today's hearing will be live streamed to the public on OTA's YouTube channel, so any information that we say today will be viewable by the public. Therefore, please be careful not to share any confidential information, such as home addresses or social security numbers. Also present is our stenographer, Ms. Alonso, who is reporting this hearing verbatim. To ensure that we have an accurate record, we need everyone to speak one at a time. Please do not interrupt when someone else is speaking, and do not speak over each other. Also, please speak clearly and loudly into the microphones. When needed, the stenographer will stop the hearing process and ask for clarification. After the hearing, Ms. Alonso will produce the official hearing transcript, which will be available on the Office of Tax Appeals website. Also, I will emphasize that we definitely want to be careful to wait until someone else is done speaking before we start speaking. Ms. Alonso got probably the most difficult job of anyone in this room, or at least one of them, and while she does her best, she really cannot get an accurate record if two people are speaking over each other. So I'll emphasize that again. Okay. Now, if everyone is ready, we will go on the record. Thank you. Okay. Sorry. Okay. We are on the record for the appeal of Gallagher's Irish Pub. This is OTA case number 231014464. Today is Tuesday, August 19th, 2025, and it is approximately 10:52 a.m. I'm Suzanne Brown, and I am the lead panel member for this case. My co-panelists today are Judge Greg Turner and Hearing Officer Kim Wilson. Although I am the lead for purposes of conducting this hearing today, all three members of the panel are co-equal decision makers in this process, and they are free to ask questions or otherwise speak up at any time. This hearing is before the Office of Tax Appeals, or OTA. OTA is not a court, but is an independent appeals body. OTA is staffed by tax experts and is independent from the state's tax agencies, including CDTFA. Because the Office of Tax Appeals is a separate agency from CDTFA, arguments and evidence that were previously presented to CDTFA are not necessarily part of the record before OTA unless they were directly submitted to OTA. OTA's written opinion for this appeal will be based upon the written arguments that the parties have submitted to OTA previously, the exhibits that will be admitted into evidence today, and the arguments presented at the hearing today. As a reminder, the panel does not engage in what's called ex parte communications, which means that the panel does not speak to one party without the other party present. All right. There are various topics that I will go through before we hear the parties' presentations today. Those include what the exhibits are going to be, witness testimony, and other logistical things. And once I'm done, I will ask if anyone has any questions about the proceedings or if there's anything I didn't cover, and I'll hear from you at that time. First, I want to address the exhibits. And actually, hold on, I'm going to grab my paper. So we held a pre-hearing conference in this matter, and I issued a document called Pre-Hearing Conference Minutes and Orders that summarized some of the things that we talked about. There have been subsequent submissions, and so we will cover all of that again before I hear the parties' presentations. At the pre-hearing conference, we discussed that there was a deadline to submit exhibits, and that was August 4th, and both parties did submit timely exhibits prior to the deadline. And now I will address each admission of each party's exhibits. I'll just briefly remind everyone that once a document is in evidence, either party can rely on it, so it does not matter to the panel which party submitted the document. All right, I'm going to address CDTFA's exhibits first. Appellant timely filed an objection to admission of CDTFA's exhibits. CDTFA's exhibits are marked as exhibits A through K. Appellant's objection described reasons why, I'm going to summarize here, reasons why appellant does not agree with the statements and findings in CDTFA's documents. However, that is not what determines admissibility. Admissibility is specific to the regulations that govern these proceedings, and those are under California Code of Regulations, Title 18, it's Regulation Section 30214 specifically. It specifies that all timely and relevant evidence is admissible. There are some exceptions to admissibility, but none of them are relevant here, and none of them were raised by appellant. Things like attorney-client privilege, that's not an issue here. Appellant's objections pertain to the weight that the panel members should give to CDTFA's exhibits, and the panel members will take these arguments into account in considering and evaluating what weight to give to the exhibits. But appellant did not raise any reason for that the panel should not admit the exhibits into evidence as part of the record that the panel can look at. The exhibits are relevant and they were timely submitted, and there's no basis to sustain appellant's objection to admission of the exhibits. Therefore, CDTFA's or appellant's objection to admission of the exhibit pages is overruled, and CDTFA's exhibits A through K are admitted into the record. All right. Next I will address appellant's exhibits. And appellant submitted an updated exhibit chart and some new exhibits in addition to the exhibits that appellant has previously identified. Appellant has marked them as exhibits 1 through 23, although there is no exhibit 4. And I'll just briefly summarize that these are a combination of approximately 145 pages of exhibits that appellant submitted with its December 23/January 2024 reply brief, plus additional exhibits that appellant submitted in anticipation of the pre-hearing conference in July of 2025, plus additional exhibits appellant submitted on August 1st of 2025. And then also I'll note that on August 8th, appellant's objection to exhibits had one page attached to it at the end that appears to be a printout from CDTFA's website. Appellant didn't mark that as an exhibit, but I think we should mark it as an exhibit. My first question is going to be whether CDTFA has any objection to any of these documents being, appellant's exhibits being admitted into evidence.
No, Judge.
Thank you. All right, so before I admit appellant's exhibits into evidence, I want to label this one page that appellant submitted on August 8th. It's a CDTFA printout of that appears to show appellant's payments. Are we calling this Exhibit 4 or Exhibit 24? 24, okay. Let's call this Exhibit 24. And there's no objection from CDTFA, and therefore I will say that appellant's Exhibits 1 through 24 are admitted, although there is no Exhibit 4. All right. Does anyone have anything further to raise about the exhibits? Oh, actually, I did have one thing I wanted to mention on appellant's exhibit chart. It's Ms. Urban. Oh, I just realized, I think I forgot to have everyone identify themselves for the record. I'm sorry. Can I ask all the parties to identify themselves for the record? I'll start with Ms. Urban for appellant.
My name is Kelly Urban, representing Gallagher's Irish Pub, Inc.
Thank you. And
Nalan
CDTFA?
Nalan Samaravictam, a hearing representative for CDTFA.
Jason Parker, Chief of Headquarters Operations Bureau with CDTFA.
Chad Backus, attorney with CDTFA's legal division.
Thank you, everyone. I was saying, Ms. Urban, I wanted to ask, you had marked document 19 amended returns as 87 pages. I don't have 87 pages. I wasn't sure if that was a typo. I mean, the document that contains them is only 145 pages of exhibits, and there's other documents. I counted something like 48 pages.
I'm not sure of the amended returns that were submitted to the CDTFA after corrections. They're usually about 3 pages long, and just over time with the files I've submitted, I'm not sure which ones that I put in, but it should represent the official final amended returns that are in the CDTAF system. So I really couldn't tell you how many pages there were.
As I said, I counted about 48 pages.
Mm-hmm.
So I'll just note that I think that number of 87 was not correct. All right, I've admitted the exhibits from both parties. Now I was going to move on to confirming that, as we discussed during the pre-hearing conference and as stated in my pre-hearing conference minutes and orders, the issue is phrased as whether further adjustments to the amount of unreported taxable sales are warranted. This issue concerns the tax for the liability period of April 4th, 2014 through March 31st, 2017, which is covered by the notice of determination dated April 11th, 2018. I did raise a question during the pre-hearing conference and put the parties on notice during the minutes and orders to address the question of whether appellant has already paid the liability. And then in response, appellant, in submitting filings after the pre-hearing conference to OTA, which were forwarded to CDTFA, raised questions about this, about whether, what appellant needs to do. I did indicate that we don't have a claim for refund, but any claim for refund would need to be filed with CDTFA. I guess I'll turn to CDTFA and say if they want to address this briefly, whether appellant would need to file a claim for refund. Go ahead.
Yes, so we do show payment in July of 2023 from the sale of the business from escrow that covered the entire liability. So there is currently a zero balance on Gallagher's, on appellant's account. A claim for refund has not been filed, but because the payment was made pursuant to a notice of determination that is not yet final, a claim for refund can still be submitted, and it's 6 months after. Appellant has up to 6 months after the notice of determination goes final to file that claim for refund.
And I don't know whether CDTFA will require appellant to file a separate claim for refund at this point, or whether CDTFA would treat some of the filings already as a claim for refund, or if you cannot say that, I understand.
To be safe, it's always a good idea to file an actual claim for refund, which we would be happy to email appellant a blank copy of the claim for refund form. But that's, and obviously the claim for refund is only in a situation where appellant prevails.
I understand.
In her
Yes,
appeal.
Ms. Urban.
Just a clarification that the payment for the lien did not come out of escrow. It came privately through me, through my bank account before escrow.
Okay, and Judge Turner, you were going to say something.
Has CDTFA issued refunds on this account during the pendency of this appeal?
I did see some refund checks issued to the taxpayer after the payments were made. I think it was around a little over $1,500 refund, tax plus interest.
So then I guess I want to get to this issue about the demand for a claim for refund to be filed. You've issued refunds already on this account during pendency of this appeal, but now you're saying that the taxpayer is required to file a claim for refund in order for you guys to settle the account. Should a balance be owed them at the end of this hearing?
The overpayment, so the tax amount that was due, there was an overpayment. So tax wasn't due for the extra amount, so that amount isn't applied to tax. So that amount can always be refunded to taxpayers when they just make payments and the tax liability is less, we can refund that money without a claim for refund. In this case, we've determined that the tax is this amount. So if they made an overpayment of the tax that's determined, then they need to file a claim to get that overpayment back.
So if the ultimate determination is that the taxpayer has paid in more than they owed, then you have the existing authority to refund that amount to them in absence of a claim for refund? I'm trying to understand the difference between when you are demanding a claim for refund be filed and when not. Because you've issued refunds already on this account, but there seems to be a suggestion that a claim for refund be filed if the consequence of this process results in the taxpayer having paid more than they actually owe.
I believe because it was an amount that was either self-assessed or determined by the department at that time, the claim for a refund needs to be filed in order to refund the amount that was assessed.
Okay.
All right. Ms. Urban, you had something you wanted to add?
A little bit of clarification on that. I'm not quite following the back and forth here, but I do have a letter from the state in literature where they were correcting a district tax error, and that was why one of the refunds was submitted.
All right. I think we can move on at this point, because I will note we're just dealing with preliminary matters yet. Preliminary matters, and we have not started hearing the parties' presentations yet. I just wanted to clear that up before we began. All right. I just want to briefly cover, we discussed at the pre-hearing conference that CDTFA is not calling any witnesses, and appellant is calling one witness, and that is Ms. Urban. And before we begin with your presentation, I am going to swear you in as a witness, but we can hold on for just a minute. I'm going to briefly go over the time allocations that we're looking at. Appellant requested up to 45 minutes, and that's fine. Once we hear appellant's presentation, we will may have questions for Ms. Urban as a witness. CDTFA is, the opposing party can ask questions of the witness. The panels may have questions. The panel members may have questions. Once we're done with questions for appellant, then we will hear CDTFA's presentation, which CDTFA has estimated will take about 30 minutes. Is that still correct?
Yes, Judge.
Thank you. All right, and then the panel may have questions for CDTFA or may have additional questions for appellant. And then once both parties have completed those presentations, then appellant will have a time for a rebuttal of up to 10 minutes. I did not schedule a rebuttal from CDTFA, but if CDTFA has anything to add at the end, I'll allow time for that as well. If at some point anyone needs a break, we could take a break of like 10 minutes or so, but we're not going to break for lunch. We're just going to go straight through. The stenographer is certainly welcome to request a break at any time. Okay. All right. Does anyone have any questions or other things to raise that I did not cover before I swear in Ms. Urban as a witness and we hear appellant's presentation? Okay. If no one has anything further right now, then I'll say, Ms. Urban, I will swear you in as a witness. If you can raise your right hand. Do you swear or affirm that the testimony you are about to give will be the truth, the whole truth, and nothing but the truth?
I do.
Thank you. All right, you can begin, and you have 45 minutes.
Good morning, OTA and CDTFA. Thank you for the opportunity to resolve this audit in person. I drove 4 hours to be here. I have moved after I sold the restaurant to remote area of Trinity County. And because I don't trust my internet signal and my computer not to freeze, I prefer to be here in person. I waited 8 years to resolve this. I've never been to Sacramento, and I'm not used to these big buildings and air conditioning and people in suits. Where I live, bras are optional. So thank you again for this opportunity. I'm going to tell you why the audit is wrong and no longer viable. 1, the returns have been amended and are in the CDTF system, and there is no difference between the recorded and reported values. 2, all the taxes were paid in a timely manner, first, second, and return payments for each quarter of each year. 3, amending the returns had no effect on the taxes already paid. The taxes originally paid were correct to begin with. Amending the returns just corrected bookkeeper mistakes and misunderstandings for corporate identity. 4, the CDTFA Audit Department has used sales on our federal returns that include sales of lodging as we ran a hotel. With exception of 2 crossover situations included in the use tax returns, any comparison of the federal returns to the CDTF returns will result in false markups and cost of goods sold. The hotel lodging taxes, the TOT, the transient occupancy tax, or simply the bed tax, were collected at 12% and remitted to the county and are not under the sales and use tax accounts. Number 5, the audit department has manufactured a shelf test to support their assumption and has made errors, including transcription errors, overestimations of purchases and sales, has assigned taxes to sales that did not exist, has unexplained error percentages, and has used information from invoices beyond the parameters of the audit period.
Ms. Urban, I'm actually going to say you can go a little slower because, again,
Okay.
stenographers need to keep up.
The audit department has, quote, attached, but does not, quote, accept the corrected returns that would nullify the audit, which is against tax code. 7, the audit department has used alternative methods to calculate sales when 100% of my invoices, sales receipts, computer reports were provided, again, against tax code. 8, audit department has ignored or denied my proof on many occasions, saying that it would discredit their numbers, again, against tax code. They cannot accept my documents as proof, as it cancels their arguments. Exhibit A, quote, assignment activity history, page 34, last entry dated 16 August 2023 from Joanne Berry, the auditor, quote, sent email, I can't recommend adjustments to the amounts per the DNR because adjustments would put an alcohol markup below an acceptable amount and below self-test calculations, end quote. Number 9, the lien was paid to sell the restaurant in July of 2023, but errors were made by the audit department in not recognizing payment, holding up the escrow with a secret hold, and sending a duplicate invoice and an already paid tax bill on equipment. The result is that I feel I am due to a full refund of the lien payment plus interest as stated in Exhibit A, page 100. And I'm going to skip that right now because they've already conceded that we can do a refund. Let's see. I'm going to show you how the CDTFA created a false assumption and then manufactured proof of their false assumption. I have 6 major points to discuss. Point number 1, the returns are corrected. There were reporting errors by the bookkeeper on the original quarterly returns that have been corrected and entered into the CDTA tax system, again showing no taxes owed. This is shown by document number 1. It's a chart that I compiled showing taxes due versus tax payments derived directly from the tax payments page on the CDTFA website, document 2. The amended returns were accepted by the CDTFA tax department. Why can they not be accepted by the audit department? The audit department are not looking at these corrections, as in document number 17, email from auditor Joanne Berry, August 12th of 2023 on the use tax returns. The email acknowledges the receipt of the returns, and Ms. Berry replies, and I quote, your amended returns were attached to the audit file, but not accepted as filed because there is an ongoing appeals case for those periods. Any adjustments to the liabilities must go through the appeals process, end quote. Point number 2, auditor's admission of the lodging business in comparison of the federal to the CDTF sales and use tax returns. Only in one portion of the audit documents does the auditor, Jamie Hayta, mention that we operated a hotel. In most correspondence from the audit group, they list Gallagher's Irish Pub, Inc. as, quote, business, restaurants, and full bar, stated in Exhibit B, page 102, February 26, 2019, prepared by Brian Hawk, H-O-C-K. Overlooked is that for 3 years, we ran a 34-room Victorian hotel that had lodging room sales, taxed at the 12% bed tax remitted to the county. These lodging sales are not reported to the CDTFA on the quarterly returns, with 2 procedural exceptions, as they are not subject to the sales and use tax, but the 12% bed tax. They were reported on the California state returns and federal income returns. Therefore, any comparison of food and beverage sales on the POS, which is our point of sales or computer reports, any comparison between the POS reports and the quarterly sales tax returns to the state or federal returns will yield false data if the hotel lodgings are not backed out. There is no way to compare apples to apples if one set of data contains hotel lodgings and food and beverage and the other does not. All tests performed by the CDTF audit department are wrong, being due to lodging income being included in the federal returns. The audit department has created a shelf test overestimating our sales and purchases of alcohol and taxed us on sales that we did not make on alcohol that we did not purchase. They have not shown one document or shred of evidence that any additional purchases or sales were made. They have not isolated a single invoice that is not already in my files. The burden of proof is on the audit team, as I cannot prove the negative nor produce invoices for sales that did not happen or purchases that did not occur. Exhibit Document 6, I prepared an Excel spreadsheet of all of my alcohol purchases from all of my invoices, showing purchases of $239,027, not the $408,000 as the state estimates. That is an error of $33,381. Equates to a 27% error on their behalf. Furthermore, if you just take that overage of the $33,000 and multiply it back by an average drink cost of $7, you come right back to the $234,000 benchmark that they think is a difference in my sales. This overstatement of purchases exactly mimics the assigned sales the state has applied. The state has not explained how the percentage of alcohol errors are applied. I have asked repeatedly. I was told to ignore the test on more than one occasion, and the test is a backup and would not be used. In the first phone hearing with Judge Dominic Jansen in January of 2023, he also suggested that the alcohol test should be ignored and wouldn't be used. It is being used, and my question remains, how can you apply random errors to my finite daily sales? The errors and assigned sales throw my proportion of 20% alcohol sales and 80% food sales month to month, year to year, completely out the window. When asked why there are no food errors, they replied it is too hard to calculate, both from auditors Jamie Hayda and Joanne Berry. When I asked what constitutes an error, I received no reply. Are they honestly suggesting that we did not ring in $234,000 worth of alcohol drinks? And how would that apply to a customer? Do they think we're giving away free alcohol? The shelf test, which has many errors in it, from transcription to incorrect fourth quarter sales values, to using the wrong tax rate on one quarter, to using markups derived from the federal returns that contain lodging sales, to using invoices out of the date range, does not make the test accurate. As the assigned liability keeps changing over time, originally $393,000 in the first test with a 1 ounce pour, reduced to $234,000 with a 1.5 ounce pour, However, I did apply in 2018 that a majority of our cocktails have a 2-ounce pour. No corrections were made for that. The current value is at $215,000 with credits given for a few gift certificate sales and half of the overstatement of the fourth quarter Scotia sales. The error percentages keep changing. It seems to me that if there physically existed errors, the errors would persist in my sales and not fluctuate. The assigned errors are not based on my sales or receipts. It's just an algorithm created by the state with my sales on one side and the proposed liability on the other. Then they've asked the computer to manufacture errors so that they get this end result. They could easily change the errors within the program by shorting quarter one, figuring out what the shortage is, and applying a higher percentage to a later quarter. The errors are not directly tied to sales. They're manufactured and assigned. Also, the errors have gone as high as 75% on any particular quarter from test one, which I think is ridiculous. Another interesting fact is that in the literature and in the test, they state that the actual difference between my reported and recorded sales is $178,000. But they keep using a figure of 234, which has now been reduced to 215. I would like to know what is the correct figures, the actual sales versus reported 177, or the $234,000 that they created by overestimating my alcohol sales. A little brief history of Gallagher's and Gallagher's Irish Pub to help you understand how the errors occurred. Reed and Kathy Paden, P-A-D-E-N, created Gallagher's in Old Town Eureka in January of 2005 with their 2 minor children, Wes and Valerie. I was hired on as a server from day one and remained until I sold the restaurant in 2023. When Reed turned 65 and retired in January of 2014, he turned the restaurant over to his son, Wes, 21 years old, 66% equity as president, and myself, 33% equity as secretary. In February of 2014, 1 month later, we acquired a 3-year lease on the Scotia Inn, a 34 gorgeous historic hotel in the town of Scotia, 30 miles below our Eureka restaurant, population 1,000. Due to the difference in the service and quality of operations, or quality of service and operations, I did not step foot in the Scotia location for an entire year from January 1st, 2016 until second week of January 2017 when I went down to collect our files and inventory. The family had left weeks previous. They actually left a cat in the lobby, and I still have the cat to this day. Wes Paden, as president, is unable and unwilling to assist with the audit, even though he was the sole operator of Scotia and president of the corporation. I have had no contact with them for years and have had to handle the entire audit by myself. When we incorporated, we kept the same bookkeeper, Lauren Kinderknecht, Kinderknecht, and CPA Terry Pontes, Pontes. Lauren managed our entire books, payroll, taxes, and reports. Terry prepared the federal and state returns. Number 3, the bookkeeper errors. The quarterly tax returns have been amended twice. When Reed Paden retired and Wes and I formed Gallagher's Irish Pub, Inc. in 2014, Reed did not close his books or accounts with any entity. The bookkeeper misunderstood the corporate structure and thought that the Scotia Inn component was solely Wes and I's venture, and that the Eureka Gallagher's was still under Reed's ownership. Over the course of the next few years, the bookkeeper cross-referenced all accounts with the CDTFA, the IRS, the state of California, the EDD, and the unemployment department, among others. Also, keep in mind that the Scotia location is in a different tax district, and we collect the bed taxes paid to the county. In 2017, June and July, I was alerted by Julie Spanier of the CDTFA of problems, and she helped me correct the returns to show that the sales were under Gallagher's Irish Pub only, and assisted in closing Reed's accounts with lots of advice and direction, and I truly thank her. Also keep in mind that this was before online filing, and all calculations are hand done by the bookkeeper and hand mailed, and to the best of his ability, the returns had to be amended by hand, as they do not exist in an editable fashion in the CDTFA computer system. Ms. Spanier alerted me that new computers were coming into the CDTFA with the online filing, but she was not even taught the computer code yet and was in training. So we continued with the hand corrections, not knowing about the sales conflicts. This oversight wasn't discovered until 2023, after proving that there were no alcohol errors. The first corrections were to ownership. The second amending of the returns included the corrections for the underreporting of the non-taxable sales. Point 4, explaining the non-taxables. We had several categories of non-taxables: deposits for weddings and events. We have now resolved those issues, and everyone agrees that deposits are not taxable. However, once they were entered into the POS system and then later refunded, you cannot back them out of the POS system. So a note was given to the bookkeeper that that deposit has been refunded. The second category of non-taxables are the gift certificates purchased. Again, no sale or service has been exchanged, therefore no tax. I was asked by the CDTFA to give receipts of samples of gift certificates sold. The auditor then performed another test to calculate the gift certificate sales for the entire audit period based on some of the samples I submitted. This is nowhere near accurate. They selected 15 samples over a narrow 12-day period out of 1,450 days of operation. That's a very poor test. We had one particular customer, an insurance agent named Paul Nicholas, who has now passed away, and he would support an entire restaurant for a year, buying all of his gift certificates for them, for his customers, for every event: birthdays, retirements, everything. Christmas. Some days he would come in and buy $500 in a day. My point being, the gift certificate credit is too low. Now, the third and most important non-taxable category we used was for personal loans or capital infusions to the corporations. We were frequently short of funds for payroll and taxes, and the quickest and most economical way to get funds into the bank is to borrow from our own credit cards and document it through the computer POS system. It's very common for operators to supply their businesses with loans. Restaurants have a very slim profit margin, if any, and I watched recent OTA hearings where many businesses have done as I have, documenting the loans through the computer system. The audit department saying that it is not plausible and it would throw off their markup does not cancel out the fact that the loans occurred and were rung through our POS system with receipts as proof. In Exhibit B, page 194, under Petitioner's Contentions, number 4, quote, "The petitioner contends business loans may have been included with POS sales," end quote. False. I contend they are in the POS system, and I have furnished receipts. Exhibit E, 254 through 263 are examples. Each use of a credit card loan was rung as either a non-taxable and on 1 or 2 occasions as retail, where we accidentally taxed our own loan. Yes, I did this. Exhibit E, page 259, shows a receipt where I totaled loans in one day of $5,500, most likely before a payday or a tax payment was due, and I rang it under retail instead of non-taxable and charged myself $492 in tax. I asked the bookkeeper to back that out of the tax sales as it was a loan. It cannot be corrected in the POS system. Each credit card loan was rung separately, and each receipt clearly states loan from Kelly with Kelly Urban with the credit card number, the date, etc. Exhibit E again, 254 through 263. I always print several copies of the receipts and send one to the bookkeeper to back the loans out of the sales, as it was not a sale but a loan, a capital infusion. He did so and included them as capital infusions and owner investments in our balance sheets. Exhibit A, called Assignment Activity History, page 34, dated August 16th, 2023, from Joanne Berry. Quote, Gallagher's balance sheets showing owner equity infusions, end quote. Also, Exhibit J, page 448 to 452, balance sheets from bookkeeper. At one point, Ms. Berry stated that my name was not on the receipt and cannot be accepted when it is clearly visible. I produced credit card statements matching the credit card numbers on the receipts. The audit findings and determination letters stating that it is not possible to run loans through the POS is wrong. In fact, it was accomplished very easily with a swipe of a credit card. My receipts are de facto proof. The audit department states that they cannot accept my loans as non-taxables, as doing so would put their markups beyond acceptable values. Exhibit E, decision, page 252. Quote, based on the department's markup analysis, the capital contributions could not have been included in the POS data used for the audit because it would result in an unrealistically low markup. If capital contributions were removed from the POS data without verifying that they are included in the POS data, the markup would even be lower. Based on the unreasonably low markup, we find that it is unlikely that the capital contributions were included in the POS data used for the audit. If, however, they were included in the POS data, there would likely be other sales not recorded to account for the current makeup. Accordingly, we find no basis for the adjustment, end quote. So, are they saying my receipts are fake, or are they saying we didn't ring in other sales? And how does that relate to a customer? I'm going to give you some alcohol and food, but I'm not going to bring you a receipt because I have to hide sales from the tax people? And if they're paying with a credit card, I have to furnish them a receipt with food and beverage on it. I did ring in my loans through the POS system, and their markups are wrong because they used the wrong data to calculate them. My proof of loans cannot be discounted by the audit department having unhappy numbers. The CDTFA does not set prices or markups. Competition and market set the price. Therefore, the markups, which are a cost of goods sold divided by the price, are arbitrary, not fixed for each item, and can fluctuate daily with the price of costs of goods sold. We were on one block away from a competing restaurant, and our prices were the same to the penny. We were across the street from another restaurant and diagonal from a bar, and our beer and liquor prices were the same. Point number 4, hotel rooms. We ran a hotel. Information that is missing on every audit document, as they state we were a restaurant and bar. On occasion, hotel rooms were rung on the Harbor Touch restaurant POS system. This occurred for two reasons. First, the hotel lobby lodging computer predated our lease, and we used their program with their booking installed. The credit card processing company, called Eureka Payments, had the older model processing machine where you key in every little component. The connection was also phone dial-up. At that time, our Eureka Payments terminal did not honor American Express. If a customer came in to rent a hotel room and had nothing but American Express, we did not turn them away. We added in the 12% bed tax to the room sale and took the credit card with the guest's permission over to the restaurant computer and rang the sale under non-taxable, as we had already included the tax. We saved a copy of the receipt and alerted the bookkeeper to the crossover. This is not illegal. We provided a service and captured a sale and collected a tax. The second reason we used the restaurant POS system on occasion was during storms, when the phone line would go out to the Eureka Payments processor. However, the restaurant system would still be live, or if offline, it could capture the payment and store it until the full power returned or the lines were open. We were in the Redwoods, and severe winter storms are common. In addition, and noted in documents with the CDTFA, Scotia, the town of Scotia, was converting to PG&E, and construction often interfered with power issues. There is no law or code that requires us to use a certain computer or software. We did the best we could to keep the records straight and still accommodate the customer. The bookkeeper was notified of any crossover. I find that several times in communication with the CDTFA that room sales, as in hotel lodging rooms, were confused with event room rentals, which were taxed in our system. If we did not ring the occasional hotels in the restaurant computer under non-taxable, the computer would be adding a use tax on top of the 12% bed tax, and that would be overcharging the customer. In hindsight, we should have had the POS computer company create a hotel room sales in our restaurant POS system, but we just never considered it. Point 5, errors in the audit and record keeping. Now, the audit began at 8 a.m. on August 19th, 2017 with Jamie Hata, H-A-T-A. It lasted 8 hours and was performed in front of customers, as we needed access to the PO system and I did not have an office. 10 boxes of receipts and files were stacked by the front door, first table where we were performing the audit, and in the hallway to the restrooms. Exhibit document 10 through 14. In many sections of the correspondence and decisions and findings from the CDTFA, it states I only supplied alcohol invoices for 2 months. That is untrue. We supplied every single invoice with backup files from the vendors and the original audit shelf test list invoices from every quarter. I want to state again that we have given every receipt, invoice, and return. The only item missing from the audit at that time was the unfinished 2016 federal returns, which again includes lodging, so cannot be used to compare to the CDTF returns unless the lodging is backed out. So the audit lasted 8 hours, and only after many hours in did I have a question as to why the auditor, Jamie Hata, was only asking questions about alcohol. Why was she not asking questions about food sales, which were 80% of our total sales? She also asked questions such as, what are your drink prices? And I felt that odd, because you don't go into a store and ask, what are your food prices? I feel that before the in-house audit exam began, the audit department was predetermined to focus only on alcohol. This was not an exploratory discovery, but it was a mission by the audit department. Ms. Haida had no experience with bar or restaurant, which is fine. I took her behind the bar and I explained to her the different glassware, the different pours, the different makeup of drinks and cocktails, details that would greatly impact testing calculations. I do not believe the complex nature of cocktail variety, low-end versus high-end pours, are accurately calculated or weighted in the state's test. Again, Ms. Haida had full access to every single invoice and receipt and every single daily sale in physical form and on the computer and in my journals. Ms. Haida verified I triple documented by receipts. Again, exhibit document 10 through 14. Photos of the daily receipts and then sent in an envelope, document on the front of the envelope, bundled and boxed, also recorded into a journal. Ms. Haida explained that she was sampling invoices as she copied them and that they would estimate my purchases. I asked, why would they do that? Why don't you take all my invoices to prove my purchases? And she said that it would take too long. Exhibit A, page 38, 11/7/2017, on the second entry. It says, quote, Kelly also said she showed me the 10 boxes of receipts and asked if I needed to see them again. I emailed Kelly back saying I did go through the box of receipts. However, it is too time-consuming to schedule every invoice, end quote. I had every single receipt invoice, so it's not fair that the state disregards them and creates what they think my sales should be. My sales are what my sales are in the POS reports. I created a spreadsheet, as the state did not have time to, of my alcohol invoices, and I inadvertently sent Mrs. Berry an incomplete copy, missing one row. She noticed that, and in Exhibit A, Assignment Activity History, Ms. Urban sent email that all invoices were not accounted for on her spreadsheet, and she will redo. I sent her a corrected copy immediately. She also says that her auditor's file proved that my files were missing, yet they didn't have time to look at all my invoices, so how do they know which ones are missing? They have never provided any proof of a single invoice that was missing. The state has no tolerance for minor errors, yet they make many. As I also had the backup records from the vendors, which also took 2 years to acquire, as they replaced their computers and there was a language incompatibility. And now one of those major companies is leaving the state. Document B, page 104, is called Staff's Position. Quote, Revenue Taxation Code 6481. The board, if not, quote, the board, if not satisfied with the return or returns filed by a taxpayer, may compute and determine the amount required to be paid upon the basis of the facts contained in the return or returns, or upon the basis of information within its possession or that may come into its possession. Where the board establishes a deficiency, the burden is upon the taxpayer to explain any disparity between the books and records and the results in the board's audit. Riley Bees, Inc. versus State Board of Equalization, 1976. Well, the opposite is true. I have furnished records. They cannot say that I did not. The CDTA's discounting and ignoring my records and attaching but not accepting them is not an establishment of deficiency on my part. I have proved with physical documentation every single invoice, daily receipt, sales report, and returns to show that no taxes are due. The state should not determine or assign any sales other than the true sales documented in the POS records invoices. There are no missing documents nor missing sales. My records should stand as facts. Going to document Exhibit B, pages 102 through 105. quote, or under the Business Tax and Fee Division Summary Analysis Petition for Redetermination, February 26, 2019. They state my business as a restaurant with full bar. No entry for hotel lodgings. The audit department says the difference between the recorded and reported is $234,000, as stated on Exhibit 12B in the shelf test. But they also say the difference is $178,000 as stated on CDTF Exhibit B, pages 228 on 12B. So in 12B, they state it's $234, and on 12B2, they say the difference between my sales reported and recorded is $178,000. Now, figure 12B still contains a fourth quarter Scotia sales error of $32,000. So which is it? And why hasn't the credit for the overstatement of the fourth quarter Scotia sales been fully given, as the biweekly sales reports were provided to prove that the Scotia total sales for fourth quarter 2016 were $33,000 and not $66,000, which is a duplicate of a previous quarter. Either way, none of those figures matters, as the reports were corrected, and there is a zero difference between reported and recorded. The state never ran the test again with the corrected reports. If they did, there would be no difference. So any credits they apply or refunds they give me are irrelevant because there's no difference. There are no credits needed at this point. Exhibit B, page 103, general background. Again, hotel lodging is not mentioned. In the list of provided books and records, they say I provided invoices 7/1/15 to 8/31/15 for alcohol, and 7/1/17 to 7/31/17. This is wrong. I provided every alcohol invoice, plus backup registries from the alcohol companies. The auditor used invoices outside the audit period to compute markups. Invoices from 7/1/17 to 7/31/17 are beyond the scope of the audit, which ends in first quarter 2017. Again, inflating numbers. I have supplied every possible record. It has been documented by the auditor Jamie Hayta that I triple document. I had the daily PS sales report in the POS system. I took the I already covered that, sorry. I have supplied loan receipts, bank statements, credit card statements to prove personal loans. I have showed gratuities are taxed, alcohol and food are taxed, room fees are taxed, and hotel lodging sales are taxed at the 12% rate and paid to the county. I have provided amended returns showing no difference in sales between POS and quarterly returns. Since there is no longer a difference between the reported and recorded, and I have all my alcohol purchase receipts, I demand that my actual invoices be used as the true amount and not the auditor's estimation. Physical receipts prove the auditor wrong. Purchases were overstated by $33,000. In conclusion, I contend that my documents are 100% correct, from the PO statements to the loan receipts to the food and alcohol purchases. The state has not compared apples to apples. The state has overestimated alcohol purchases, has made errors in calculations of markups, cost of goods sold, averages, used invoices outside of the audit period, and assigned sales that did not happen, and completely ignored proven documentation that they have in their exhibit. They have never explained how their error markups occur in real life. They can't explain why their markups would throw out my consistent sales, 20% alcohol, 80% food. And yet they say they cannot accept our true sales, our true invoices, reports, or markups, as it puts their markups in an unacceptable range. The audit department has stated that they cannot accept my PO's returns, nor my documents, as they prove that their tests and markups are low. I ask that we stick with the truth and the facts and use my physical receipts, invoices, and returns regardless of how it makes the state test results appear. Now, many more difficulties arose out of this audit. When I was selling the restaurant, closing was not proceeding. Escrow was to be finished by July 31st or earlier, as it started in early June, and was to be 30 days, well before my liquor license was expiring. Due to the problems with Auditor Joanne Berry in the audit department, closing was delayed until August 17th, and I had to buy a new liquor license for $1,000 as mine was expiring on July 31st.
Ms. Urban, can I just generally, can I interrupt for a moment and ask, you just have a minute left. Are you nearing the end of your presentation?
I am, yes.
Okay, I'll give you another couple minutes. Go
Okay.
ahead.
Basically, escrow was not closing, and we found out that Ms. Berry had put a secret hold on the audit, but not even told the escrow department. The lien had been paid the previous month, and she was not aware of it. She even blamed me for paying it to the wrong account, even though it says on the invoice to pay it to the audit department. In conclusion, I was also double billed for the tax sales on tax equipment because, again, the audit department did not realize that the tax bill was already paid through the escrow department. I was refunded the double payment. In conclusion, the CDTF audit is unwarranted, and there's no longer any discrepancy between the POS reports and the quarterly returns. The shelf test has been proven inaccurate. The state has not relied on my vast inventory of records and record keeping. They've made transcription errors, duplicating POS returns, errors in the scope of the business, neglecting lodging sales, comparing reports with unequal categories, errors in testing used by invoices beyond the scope of the audit, ignoring evidence and volume of documents, suggesting that I did not supply records, invalidating records as it makes their testing unreasonable, not giving full credits for gift certificates, deposits, personal loans, and hotel lodgings, and suggesting loans that are not in the POS sales when they have been proven. They have not given one document that would show extra sales or purchases. They have not explained shelf tests. They have not explained how errors are occurred. Now, from watching the previous OTA hearings, I know the CDTFA will now completely ignore all the evidence I have provided and everything I have said, and they will iterate their outdated reports and decisions, which are full of errors, as I have documented. They will just rubber stamp the work of the auditor and proclaim it as good, even though I have proven them wrong. They have no evidence or discussion to address any of the issues I have just explained. I ask the OTA to be aware that I have well proved my position, and the state is just now going to regurgitate falsely derived figures. The state has made it very difficult to do business in California, but I'm very proud of myself for keeping all my records. And I would appreciate if the state would agree with me that my records prove my case, our taxes were paid correctly, there are no missing sales, and that I am due a refund of the lien paid in July of 2023 of $25,625 plus interest from that day forward. I have brought with me 61 uncashed paychecks from my ownership at Gallagher's
Ms.
Irish
Urban,
Pub.
I'm going to
And I would really appreciate a refund. Thank you.
As I said, we are out of time, and I will remind you that we are only going to look at the documents that have been admitted into evidence.
Right.
Okay. Thank you very much. Now I'm going to first ask if CDTFA has any questions for Ms. Urban as a witness.
No, Judge.
Thank you. Next, I'm going to turn to my co-panelists and ask if they have any questions for appellant at this time. Judge Turner, do you want to ask questions at this time?
Not at this time, no, thank you.
Okay. Hearing Officer Wilson, do you want to ask questions at this time?
No, thank you.
Okay. One second. I think I'll hold my questions as well until we hear both parties' presentations. All right, so we can move on to CDTFA's presentation unless anyone wants to request a break. Okay? If we're, okay. I'll say CDTFA, if you are ready to go forward, you will have 30 minutes.
Thank you, Judge. Pelen is a California corporation that operated 2 restaurants with a full-service bar and provided catering sales located in hotels in Eureka and Scotia, California. Pelen commenced business operations on January 8, 2014 and closed its Scotia location on January 31st, 2017 and sold its Eureka location August 31st, 2023. The department audited Pelen's business for periods April 1st, 2014 through March 31st, 2017. During the audit period, Pelen reported total sale of around $3.34 million and claimed deductions for exempt food sale of around $41,000, resulting in reported taxable sale of around $3.3 million, and this is shown on Exhibit A, pages 37 and 38. During our presentation, we will explain why the department rejected Pelen's reported taxable sales and how the department determined Pelen's unreported taxable sales for the audit period. During the audit, Pelen informed that it made sales through its POS system and generated POS reports to prepare its sales and use tax returns. Therefore, the department analyzed Pelen's available records and completed 2 verification methods to verify the accuracy of Pelen's reported taxable sales. First, the department analyzed Pelen's federal income tax return for years 2014 and 2015 and found that Pelen did not report all its sales listed in the federal income tax returns. And when comparing reported sales to cost of goods sold, the department calculated low overall reported book markup of around 118% or high overall reported food and liquor cost percentage of around 46%. Second, the department reconciled Pelen's sales reflected on its POS reports with reported total sales and found that Pelen did not report all its sales listed on POS reports. And this information is shown on Exhibit A, pages 70, 77 and 78. The department also determined that Pelen failed to apply the correct sales tax rates to transactions at its Scotia location. And this is shown on Exhibit A, page 68, and Exhibit G, pages 323 through 340. Pellan was unable to explain the reasons for federal income tax returns sales differences. POS report sales differences, low reported book markups, or high reported food and liquor cost percentages. An application of inaccurate sales tax rates to transactions at its Scotia location. Therefore, the department used Pellan's available POS reports, bank statements, and available sales and purchase invoices to determine audited taxable sales for the audit period. Pellan provided its POS reports for both locations, and those are shown on Exhibit G. The department analyzed available POS reports and noted sales categories of food, beer, wine, liquor, beverages, retail, service fees, taxable, non-taxable charges for banquet room fees, and mandatory gratuities. During the audit fieldwork, Pellan stated that claimed non-taxable food sales were banquet room rental fees and were related to food catering events. The department determined that charges by restaurants, hotels, and similar establishments for the use of premises where meals, food, or drinks are served are taxable, whether charged separately or not. Pellan also claimed that it sold gift certificates, and those sales are included in sales reflected in POS reports. To support this, Pellan provided its gift certificate sales for the period fourth quarter 2015 through second quarter 2016. Based on those gift certificate sales information, the department calculated gift certificate sales for the audit period. These calculations are shown on Exhibit A, pages 64 and 67. During the appeal conference, Pellan disputed the sales figures for fourth quarter 2016 at the Scotia location. Therefore, the department relied on Pellan's bank statements to determine the sales amount for that period for that location, and this calculation is shown on Exhibit A, page 69. Based on this analysis, the department calculated the recorded taxable sale of around $2.6 million for Eureka location, around $935,000 for Scotia location, and gift certificate sale of around $3,100, resulting total recorded taxable sale of around $3.5 million for the audit period. And this is shown on Exhibit A, page 62. Recorded taxable sales were compared with the reported taxable sale of around $3.3 million to determine unreported taxable sale of around $215,000 for the audit period. And this is shown on Exhibit A, page 62. To verify the reasonableness of these recorded sales reflected on Pellan's POS reports, the department analyzed Pellan's alcohol purchases, alcohol product mix, and pricing policies. Using Pellan's alcohol purchase information, the department calculated alcohol purchases for the audit period and alcohol purchase percentages, and those calculations are shown on Exhibit A, pages 58 through 60. Then the department compared the recorded alcohol sale of around $771,000, with alcohol purchases of around $272,000, and calculated recorded alcohol markup of around 229% for second quarter 2014 through fourth quarter 2014, 170% for year 2015, 208% for year 2016, 154% for first quarter 2017, and resulting in an overall recorded alcohol markup of around 195% for the audit period. The information required to calculate these recorded markups are shown on Exhibit A, page 52. To verify the reasonableness of these recorded markups, the department conducted a shelf test using Pellen's July 2017 alcohol selling prices, cost, product mix, and calculated audited alcohol markup of around 314%. And this is shown on Exhibit A, page 53 through 60. Although this audited alcohol markup indicated that not all alcohol sales were recorded in Pellen's POS reports, the department accepted the recorded alcohol sales reflected on Pellen's POS reports, thereby providing a benefit to Pellen. Had the department mark up Pellen's alcohol purchases, the unreported taxable sales would have increased by around $235,000, changing the unreported taxable sales from $215,000 to $450,000, and the information required to calculate these amounts are shown on Exhibit A, pages 51, 52, and 62. The audit calculation of unreported taxable sales based on Pellen's own POS reports and bank statements were reasonable. Further, it benefits the Pellant because it was the lower of the differences determined. When the department is not satisfied with the accuracy of the sales and use tax return file, it may rely upon any facts contained in the return or upon any information that comes into the department's possession to determine if any tax liability exists. A taxpayer shall maintain and make available for examination on request by the department all records necessary to determine the correct tax liability under the sales and use tax laws, and all records necessary for the proper completion of the sales and use tax returns. When a taxpayer challenge and a notice of determination, the department has the burden to explain the basis for that deficiency. When the department explanation appears reasonable, the burden of proof shifts to the taxpayer to explain why the department asserted deficiency is not valid. The audit calculation of unreported taxable sales based on the best available information was reasonable. Pellant did not agree with the audit finding for the audit period. Pellant continuously claimed that it reported the sales tax that it collected and it entitled for adjustments for hotel room sales and non-sales capital contributions included in its POS reports. Specifically, Pellant contends that its secretary used her personal credit cards to infuse cash into its Eureka location by charging it through the POS system. To support this contention, Pelon scheduled around $38,000 and provided credit card statement showing some funds were transferred from Pelon's secretary credit cards to Pelon's credit card sales processing account. The department analyzed Pelon's argument and ultimately rejected it. Upon examination of those documents, the department noted that the Pelon failed to provide crucial information such as its POS download with all folders to determine whether those hotel room sales and credit card transfers were in fact recorded in the POS reports used for this audit. Also, based on the department's recorded food markup analysis, the hotel room sales and non-sales capital contributions could not have been included in the POS data used for the audit because it could lead to exceptionally low food markups. Pelon's recorded book markup was considerably low, that is around 88% from April 2014 through December 2014 and 72% for year 2015, which translates to food cost percentage of 49% and 53% for those periods. And the information required to calculate these percentages are shown on Exhibit A, pages 52, 65, 68, and 77. Also, there is a direct inconsistency between Pelon's argument concerning the processing of hotel room sales and capital contributions through its POS system and the sales tax amounts reflected in the Eureka POS reports and the information required to verify. This is shown on Exhibit A, page 65. Therefore, the department rejected Pelon's argument that its sales reflected in its POS report included hotel room sales and non-sales capital contributions. However, it is possible to include these hotel room sales and non-sales capital contributions in its Eureka location bank account and credit card merchant account. But the department did not use Pelon's bank deposits and credit card deposits to determine Pelon's sales for this location. Pelon also asserts that it amended sales and use tax returns accurately reflects the actual taxable sales after adjusting for hotel room sales, non-capital sales contributions, event deposits, and other non-sales items for the audit period. Pelon failed to provide documentary support to verify the accuracy of the amounts reflected on those amended returns. However, the department's review of these amended returns reveals the reported taxable sale of around $3.4 million, exceeding the $3.3 million originally reported. Furthermore, a comparison of the taxable sales reflected in Pelon's amended returns of around $1.2 million to the cost of goods sold reflected in Pelon's 2015 federal income tax return of around $600,000 resulted in the low overall book markup of around 108% or overall high overall food and liquor cost percentage of 48%. This low book markup and high food and alcohol cost percentage resulted in the department's rejection of the amended sales amount. Phelan also claimed entitled to an $26,000 refund, asserting an overpayment of tax with its first quarter 2017 return compared to the tax due amount, and this is shown on Phelan's Exhibit 1. The department's review found that this amount was not paid with the sales and use tax return for that period, but rather around $28,000 were paid on July 6, 2023 to satisfy an audit liability for this audit period. The department understands Phelan believes it reported sales tax correctly and that this audit payment should be refunded. However, the department's records do not show a protective claim for refund filed by Phelan on or after July 6, 2023 in connection with this payment. As this payment was pursuant to a notice of determination, and because the notice of determination is not final, Phelan can still file a protective claim for refund. A refund would only be granted if Phelan prevails on its appeal. Based on the foregoing, the department determined the unreported taxable sales based on the best available information. The evidence shows that audit produced reasonable results. Phelan has not provided any reasonable documentation or evidence to support adjustment to audit finding. Therefore, the department requests the appeal be denied. This concludes our presentation. We are available to answer any questions the panel may have. Thank you.
Thank you very much. And now I will turn to my co-panelists. Judge Turner, do you want to begin with questions for CDTFA?
Yeah, thank you. I want to understand, the department just said, you acknowledge that the payment made in satisfaction of the lien is an overpayment and that it is simply a matter of the appellant to file a claim for refund to be paid that back. Did I understand that correctly?
The 1,500 the department paid is the credit balance that was appearing on the account after the audit liability. So that 1,500 is refunded, but the payment that the Phelan paid in 2023 is for the audit liability. So in order for the Phelan to receive a refund, it is her responsibility to file a protective claim. Yeah.
Okay.
Yeah.
And that amount is different than, if I understand what you are requesting, which is $25,000. And you said that was a payment on the lien as well?
The payment we made in two portions, a couple days apart, totaled $25,625. There was a limit of $25,000 that we could transfer at one time out of the bank account, and so I did a second payment for the $625. That's what the lien amount was at on July 17th of 2023.
Thank you. Another question for the department. In the context of evaluating the utilization of the POS system data, the market method is used, as I understand your argument, as sort of a check. You've made a couple of statements, the auditor made it, you've made it as well, about certain adjustments resulting in a markup that is, in your estimation, unreasonable, if I think I understand your word correctly. What is that comparative based on? I want to understand how you came to the decision that a particular markup was either reasonable or unreasonable during the audit period.
The Pellen's liquor percentage, the liquor sales percentage is little less than the 20%. When you take the total sales, food is almost 80% and the liquor was 20%. So the department used the liquor sales for both location and compare that to the liquor purchasers. Then the department calculated 154 for the first quarter 2017, 208 for 2016. And in order for us to verify the reasonableness, we did a shelf test using taxpayers' own.
Judge Turner, I just wanted to add on, because I think you asked like how we determined whether the markups were reasonable or how we determined it was unreasonable. And so we did it based on our knowledge of the industries and other audits that we've done of similar type businesses. And so generally we expect that food markup should be at least 200% or somewhere around there. And then the bar, liquor, beer, wine, that should be 300 plus. And even when we did the shelf test using their pour size, we ended up coming out with over a 300% markup. So we determined they were low based on our experience, and the test actually support that they were low.
In that context, then, is that experience relative to your statewide activities and audits over a period of years, or is it something specific to the area in which the taxpayer was operating? I want to make sure I understand the nature of that estimate, because it is that. I understand, how the utilization by the department, but I'm trying to understand that number you just quoted me for food or for alcohol, where that comes from.
Right, well, there are, that is kind of like our statewide audits look at certain things, but then there's also industry averages that you can see on research, like, in order for a business to be profitable, they need to maintain certain cost levels, which the cost levels are actually the markup in reverse. So there's that. There's also like I said, the knowledge of of auditing other businesses in the area. I know Eureka's not a large metropolitan area, so they probably don't have a lot of audits of these types of places, but we have certain things that we're looking for, and that would be like a red flag that then we need to look into this more. Not that it's obviously a problem, but that's why we do a shelf test to see is what they have recorded as their markup reflective of what we expect them to be based on their cost prices and their sales prices.
Thank you. I want to ask, understand the treatment of the appellant's alleged payment for rooms through the POS system. Did I hear correctly that the department denied recognition of any of the alleged charges for rooms that were run through the POS system? Did you deny all of those or a percentage of those?
According to the POS reports, we discovered there are different categories: food, liquor, wine, mandatory gratuities, rentals, retails. But the department did not see any room rentals in their POS, and also based on the audit, we did not receive the Pellen's POS download to identify whether any room rentals were included. And even if you compare the Pellen's POS report listing for Eureka location, the tax collected amount is almost 8.5, compared to the taxable sale that we determine is recorded sales, so it cannot include room rentals or cash deposits into the POS. Maybe it may include it into the bank statement and the credit card processing account, not to the POS account. Because the tax collected, according to the POS report, is 8.5. That's the tax rate for that location. And it's clearly matches to the applicable tax rate for that location. So the taxpayers, the cash deposits were relating to Eureka location.
That's all the question I have for the moment.
Thank you. Hearing Officer Wilson, do you have questions at this time?
I have a question for appellant. You mentioned that the deposits for your deposits for the events, I guess, were run through the POS. Is there a way to void those transactions? No? So in a typical transaction in your restaurant/bar, if there was a void, how would that show up in the POS system, or would it not?
As far as event deposits go, if you put a deposit down, say in check form, $500 for a wedding, and then a month later, and we put it in the computer as a deposit for the wedding and the name and the date, that sales is finalized that night through the computer system. You can't go back and edit it. So if you decide a month later you're not going to do the wedding, we refund you a check and tell the bookkeeper that sales was gone. You can't edit the POS after the fact.
So is there a way to void transactions in the POS system?
Oh, yes, in a daily fashion, yes. Yes.
Okay.
Like if you make a mistake or you put something on the customer's bill that belongs to another customer, yes, you can do that. But once the sales are done for the day, you can't get back into the record and make any changes.
Okay, and then, so your documentation for the deposit refunds are checks, are those in the record?
That is one of the issues that we have never discussed. My non-taxables do not have subcategories such as gift certificates, POS loan, hotel lodging. What am I missing there? The loans, the lodging, the gift certificates, and the deposits. We didn't have subcategories. So when you see on our POS reports, it's just non-taxables. For them to back out hotel sales or my POS loans or the gift certificates, it's not declared on the non-taxables how those categories are. So I have no idea how they did that.
Okay, so how did you record your deposit reversals or cancellations?
Verbally and written to the bookkeeper. We would send him a copy and show him the check. Well, and he would actually, through the bank statements, get a copy of the check. But we would just notify him that they've canceled this event and here's the refund. A lot of wedding parties, they put deposits down on multiple locations and venues, and then the bride later selects which one she wants and cancels the other venues. It's the same thing with reservations. When I worked in Las Vegas, big corporations for conventions would call and make multiple bookings at different restaurants and then cancel the one that the guest didn't choose, leaving your restaurant empty because you had reserved a reservation for a large group. So eventually we had to put cancellation fees on deposits in Vegas, not on the deposits in Scotia.
Okay, so when the event did take place, so you had the deposit a month or two in advance, and then how would you record the deposit on the transaction when it occurred?
Easy. We have the entire wedding file, and we have seen that they have put a deposit in. So again, we go to the computer and just say, give them in a payment that the $500 was already applied. And then, of course, the tax stays on the final bill.
Okay, that was my question. Thank you.
Thank you. I believe I do have questions, if everyone will just hold on for a minute. I'll start with a question for appellant. I want to ask about some, an exhibit from, an exhibit to the appeals decision that has some of your documents, and that's Exhibit E. And it's actually Exhibit 2 to the appeals decision. So it's, there were exhibits attached to the appeals decision, and it's Exhibit 2 of those. And you might be able to answer this without looking, I don't know. But they look like receipts, but I think they're printouts from your POS system that you were using as an example to show proof that you did make these cash infusions, that you charged on your credit card to make a loan to the business. And it shows, for example, 1 second. I guess my question is, it shows that there's tax on, it's like, I had in my notes that showed net sales of $5,504 plus taxes of $495.
Again, in my dissertation here, I mentioned that I accidentally a couple times rang my own loan through retail instead of non-taxable, and I taxed myself and cost myself $492. So the state received extra taxes
Okay, and so this is an example of
of a mistake.
Of a mistake,
Yes.
okay. Okay, then that was my question. I think I also have a question for CDTFA. Also in the same section of the exhibits, the attachment to the Appeals Bureau decision, and also Exhibit 2. I was going to ask CDTFA, these 3 receipt documents that appellant provided that say personal loan Kelly. So it looks like they characterize the type of charge as room fee.
That is page 251, the 1500. First, there are 2. November 18, 2024 at 11:35 for 1500. So that is the credit card receipt. It's not a POS receipt.
I'm sorry.
It's not a POS receipt. It's a credit card receipt.
Okay.
So, when the taxpayer use their own credit cards to transfer money to the merchant account, they run through the merchant account, but it didn't go to a POS system. So these 2 receipts are not POS receipts, those are credit card receipts.
I guess let me turn to appellant and
May I
say,
interject that is a receipt from the restaurant through the POS machine. It says clearly Gallagher's Irish Pub and the address and all that on the receipt.
What I think, if I understand CDTF is arguing, is that this was charged on your credit card. This is a credit card receipt,
Yes.
but how do they know that it was rung through the POS system? Is that
Because
essentially?
it's a receipt, as if you came and ordered halibut and chips and beer. You get a receipt when we give you a ticket, an invoice, and we run your card towards that sale, and we give you a receipt.
So you're saying that when you rang up these loans on your credit card, it automatically goes through the POS system?
I open up a ticket
Mhm.
and title it Loan from Kelly's, and then make an amount, and then run the card through and print the receipt.
And so CDTFA, if I understand, your argument is that you understand that appellant made this charge as a loan, but that you don't know that it was part of the POS numbers that the auditor considered. Is that what you're saying?
That's true, Judge, yeah. And if we had the POS download, we should have traced this without any issue, but in the POS report, we didn't see this, the special category, and also this particular two receipts are not from the POS, it's from the credit card machine. It specifically says the tip and the total. It came from, not from the POS, it came from the credit card machine.
May I say something?
Yes, go ahead.
How can we get a receipt from the credit card machine if it wasn't rung through the computer? And B, no, I did not have special subcategories, which in hindsight would have been amazing. But I also furnished the daily Z report or printout receipt that clearly shows the loan on there, although again, not in a subcategory. So the receipt for the loans are on the daily Z report.
Judge Brown, can I add something?
Yes.
So if you look at the POS report for that quarter, it's on page, let's see, it's 291 in the file. It's 200, bait stamp 287. And it has all of the revenue by class, which is what we used in determining the taxable sales. There is a category that says house account deposits. We did make an adjustment for that when we input the information into our Excel spreadsheets, but the taxable sales come from beer, beverages, food, liquor, retail, wine, and then as discussed before, also in the non-taxable. So we haven't seen that those amounts are in the POS or that we treated them as taxable.
Okay, thank you to both parties for responding to my questions. If my co-panelists don't have any further questions at this time, then I'll say that I believe we can move on, and we will now hear appellant's rebuttal if appellant is ready. And you have 10 minutes. And this is, I will just mention, this is to respond to any arguments or questions and everything you've heard from CDTFA or whatever you've said, whatever has been said since we heard your opening presentation. You don't have to repeat your opening presentation.
Correct.
Okay, thank you.
I'm sorry, but I do have a problem with the auditor's accent, and I couldn't hear the majority of what was going on. But in the little snippets that I did understand, again, the first thing he mentioned was that we were a bar and restaurant, again, leaving out lodging. A minor discrepancy, he says we sold in August 31st. It was actually mid-August the 18th. He used the words when he was talking about his data as compared to what was originally reported. And my whole point is that the reports were corrected, and they're not comparing anything to the corrected reports. The numbers they did use, again, he clearly overstated the purchase of the alcohols. They used their figure for estimation of alcohols and not mine, and that does create false markups. Isn't it possible, and it's provable, that we were not profitable? Our federal returns show a deficit every year. I have uncashed paychecks. We have bounced checks. Isn't it possible that our markups should not be compared to industry standards? And can they not be substandard? So, no, my argument stands that they're going to stick with the original data with no corrections, with their overestimations, and I really don't have any further questions.
Thank you. All right. If my co-panelists don't have any further questions, then I think I can say that we can conclude this proceeding. The evidence has been admitted. We've heard witness testimony, and we've heard arguments from all parties. The record is now closed. The panel will confer and will issue a written opinion within 100 days of today. And that concludes this hearing, and I believe it also concludes the hearings for today. Hearings will resume tomorrow. Thank you, everyone.